Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's Wednesday, and it's the 1st of November. My name is Russell Shaw. I'm a senior market specialist at FXCM. I want to just highlight my email address, which is rshaw@fxcm.com. If you'd like to correspond with me, that's the email address to use. If you have sent me an email, I have responded. If you haven't got it yet, just check in your spam folder. It could end up there. I'm just going to go ahead and bring up our disclaimers. We'll start off with a high-risk investment warning. I'll keep this on screen. Good morning, Kim. Mia, pleasure to have you on the webinar as always. Hello, Raj and James. Welcome as always. Thank you very much for joining this morning. Okay, I'm just going to go ahead and bring up our market commentaries disclaimer. Keep that on screen for a few moments as well. Hello, David. Good morning to you and welcome. All right, and just in terms of our references, market scope and trading view, I think that the real rate is in for us to analyze. We've got the rate statement, the Federal Reserve or the Federal Open Market Committee's rate statement out this evening. That will be 8 p.m. ZA, and I believe now with the time change it will be 6 p.m. UK, and then a half hour after that we'll get the press conference. Now, it's very unlikely that there's going to be any change in the rate. It's going to probably be held steady. What we've got to consider is the tone of the statement and the tone of the press conference. Is there any indication that we are at the end of rate hikes? Or is there some sort of indication that there is going to be rates held higher for longer? That's all going to be very important for us because it's going to filter through to the other instruments that we trade. My estimate is that we are pretty close to the apex of the hiking cycle, if we have not in fact topped. And we have this RSI yesterday is we have something called a failure swing. Okay, a failure swing is simply a trend, a change of trend on the RSI at its overbought level, or it could be at the oversold, depending if you're looking at change of directions up or change of directions down. We're looking at a change of direction down, so the failure swing would be in the overbought area. We've got this lower peak, lower trough. It generally is accompanied by changes in trend, but, and this is the important part of failure swings, is that they're never used in isolation, never ever used in isolation. So yes, we do have the failure swing. What we really need is perhaps a bearish cross in the EMAs, or we need some sort of peak and trough analysis on the actual yield itself. But some sort of cross down of the green EMA below the orange EMA would certainly be a corresponding type of signal given this this failure swing. The failure swing in of itself, to me, suggesting that we are pretty close to the apex of rate hikes. However, the tone of the statement, the tone of the press conference are going to be really important here. And if it comes through as a dovish tone, then I would suspect we do see the yields come down. I would suggest then that the dollar comes down, and I would suggest we see some sort of rally in stocks. But that's only if we get a dovish tone. If we get a hawkish, there probably some sort of cementing of the real yield, and the intermarket movements that follow that. So going to be very interesting. There is other important data coming through at 4 p.m. ZA, 2 p.m. UK. That would be the ISM manufacturing, and we'll get the JOLTS data coming out at that time. So it is quite a important day for us to consider. Let's just go down to the daily chart here and see if we can see what type of movements the real rate is potentially telegraphing. So let's just push down from weekly through to daily. Let's get rid of the all right. So what we've done previously is we did put a resistance area over here. Okay, so we're kind of at 2.54%, 2.55% got this, the real rate having some sort of resistance above us. And I would suggest perhaps, is that the apex? Is that the, and remember, we're talking about a real rate here. So this is the excess yield after we take inflation into account. All right. Yesterday, what happened was that we had the employment cost index coming slightly higher than expected. That saw support coming in for the real rate here, and then we actually saw some buoyancy in the dollar. All in all, I think this is quite a an interesting chart. Resistance above, we don't really we've got the failure swing on the weekly, but we don't have the cross down yet. So if we stay higher for longer and we just sort of drift sideways, I fear that we'll go into some sort of congestion area. That's not, to me, that's not first prize, because congestion areas are much harder to trade than trending areas. Okay, so if we go into some sort of congestion area, it's going to take some time for that to work out before the rate starts coming down. That could be quite painful for us as traders. So we just want to keep an eye on the real rate. We want to see if there's going to be a cross to the downside. Okay. Okay, this is a good point. Paresh saying, am I doing a live NFP this week? I'm not this week. I've taken Friday off. I'm going away for the weekend. So Paresh, there won't be a live trade this week. All right. Let's take a look at the dollar. All right. So you can already see that it looks as if some sort of congestion has started over here. And again, I'm not thrilled about a congestion area. Again, it's harder to trade congestion than it is to trade trend. So we've got three possibilities of dollar, and depending on which one it is, that's going to filter through to the rest of the market. So the first sort of permutation, so to speak, would be a sideways consolidation. Again, for me, not ideal. The second possibility would be some sort of push down and then a movement up like that. In other words, the dollar strength reasserts itself and we continue to trend up. I'm not certain if that's sort of my primary scenario, because I think that we are near the top of the rate hiking cycle. The third scenario would be we actually come in with a lower peak and a lower trough, and there we see the dollar coming down. That would be matched with, I think, the failure swing in the real rate, and we would see potentially some sort of bearish cross in the EMAs of the real rate. So those are the three scenarios we have in front of us. Which one it's going to be? Well, we have to wait and see. Right now, okay, we are moving in this sideways congestion pattern, and potentially are going to provide some sort of difficulty for us. Let's just take a look at this in terms of the daily chart. And the higher employment cost index did push the US dollar. So there was a bid for the dollar. It did push it into zone one. Okay, let's just put, here is yesterday. And then if you can take a look, we've actually got a much smaller real body this morning. Of course, we've got the day ahead of us. We've got the news items to be released. But right now, there is a very small spinning top, an uncertain start to the day. I'm just going to go on mute for a moment. I just got a cough. Begging your pardon. Okay, so but nevertheless, it is in zone one. It is in zone one. What's going to be interesting is if the tone of the Federal Open Market Committee's statement is to the hawkish side. Well, I think then the support areas potentially are important. If it's to the dovish side, I think we're going to see the breakdown through the support areas. But, and this is the I guess the primary message, trading a central bank statement, particularly the Fed, is fraught with risk. So just be aware that there is real chance here of heightened volatility. And again, I would suspect we're at the heart of the cycle, but I'm not sure we're going to get that dovish tone. I think we're going to get the inflation data does show moderation inflation, but it does show also that the inflation's coming down at a slower pace. In other words, the low-hanging fruit has been picked. So I think that the Fed is going to say that they're going to keep rates kind of at current levels for the foreseeable future, or for the near term. And that in of itself probably has a little bit of a hawkish bend to it. Let's go ahead and see what's happening on euro and pound. So let's just go through to euro. All right. So yesterday, after the employment cost index was released, you can see that the euro really came down from zone one into zone two. So there is a relative weakness there. We are in zone two. Zone two is the neutral area. If we do come through with that hawkish message, then I think we sort of drift towards zone three. If there is a softer, more dovish type, then some sort of movement back towards zone one. So the market, uncertain. How do we know it's uncertain? Zone two, that's the neutral area. We're not in zone one, which is bullish. We're not in zone three, which is bearish, right? So we're sitting slap bang in the middle of zone two. There is a relative movement from 1 to 2. There is also a softer RSI. That being the case, let's just take a look at the hourly chart. And you can see the crossover actually happened way back here. So the signals are late, but the stochastic is hanging out towards that lower quintile. If it maintains in that lower quintile, then we'll continue to see euro softness. So it's really now a matter, it's a function of the momentum. Does the momentum hold? So you can see we've had quite a strong momentum to the downside, right? If it holds in this lower quintile, then I think we carry on seeing that. Let's just take a look now at cable. All right, so this is an interesting chart, not quite as volatile, say, as not quite as volatile as euro. In fact, it's been really neutral for quite a long time, hasn't it? So there is this sort of neutral movement here, not quite as directionally biased as, say, the euro. Take a look at yesterday's candle. Yesterday's candle is a spinning top. Okay, you've got bulls that try to push price up. You've got bears that try to push price down. We effectively closed pretty much near the open, but it was pretty flat yesterday. What about today's candle? Just flat as can be. Flat as can be. Perhaps slight bearishness here on the RSI. If we take a look at the hourly chart, I think that the central pivot is clearly the levels we watch. I'm not sure anything happens until we get that FOMC statement, but it does look as if we've got the central pivot acting as a fair amount of resistance. Let's just take a look at two more charts and then I'll go through to the crypto minute. Let's take a look at gold and let's take a look at DAX. So let's bring up gold. Gold generally being sought after as a safe haven currently, mainly in my estimate due to geopolitics. You can see that it has moved above this 30-week exponential moving average, and the 30-week exponential moving average is pushed up. 2000 is a psychological level. If it can get above that $2,000 per ounce, clearly that's bullish, but it's bouncing against it, and the 2000s serving as a resistance level. We still have an underlying positive momentum with the RSI above 50, and it looks to me as if we've got this. Let's take this arrow out. It looks to me like we've got this sort of 1, 2, 2, 3. It's a little bit of a pause. It's not a real pullback. 1, 2. This is more of a pullback. 2, 3. 1, 2. And now we're looking to see if this is going to be the next 2, 3. The way that we're going to judge that is with reference candles. So we're actually missing a candle here, assuming that this is the reference. We'll still need to see one more on the right. It is in zone 1. So let's just go see if there's any support levels that are going to potentially hold. And what we would need to see is a bullish crossover around about the S1 level. And we would need to see the stochastic start moving upwards. Again, it is a tricky day. Why is it a tricky day? FOMC. Okay, FOMC. Last chart for this webinar. Let's just take a look at DAX. See what's happening here. All right, so there has been some interest in the risk on side of the market. Again, I want to stress it's going to be very much dependent on the tone that comes out of the Federal Reserve. We have pushed from zone 3 into zone 2, so there is relative strength, I guess, from the movement from zone 3 to zone 2. However, DAX is still quite weak. What we need to see here is if there is some sort of dovish sort of message that comes through